Hello, this is Nataraj Upadhyay. Welcome to yet another monthly top 50 mutual fund analysis, which is done on a weekly basis. This edition is for the week ending on August 2nd, 2024. Let us get on with the presentation. So the mutual fund performance summary across various mutual fund types. First, let us look into the equity funds. If you notice, equity funds in general were positive for the week and the month, except for the bottom 50, which we can ignore. The monthly return of top 50 was 9.2%, bit subdued from earlier weeks, still a good one. And these top 50 funds are at annual return of 42.87, and the annual top 50 leaders are at 74.29. At the best of the market, this used to be at around mid 80. And if you notice another thing here, you compare the 6 months returns and 1 year return. 6 month return is much lesser than half of the annual return, except for the bottom 50, which you can ignore. So what it says is that from when it comes to the bull run, the best days are behind us. So is what we can learn from here. The hybrid funds did reasonably well like before, and I won't talk about debt funds. Commodity funds, there was a recovery this week by 2.33%, reducing the monthly loss to 3.01%. Here it's interesting, an average annual return is now at 15.25, but 6 months return is 13.24. So we had a glorious 6 months of commodities. How it goes further, we need to see. But with the weekly recovery, probably we can expect at least an average return of at least 10% in the days coming. So that is what is the all summary about. Now let us look at the equity funds, monthly top 50. So monthly top 50 is filled with most of the healthcare and pharma funds. Okay, there are some FMCG funds also, and some PSU funds also here. Let us look at the one that are in green, which basically have above average return from 1 month to 1 year within this top 50, and they are HDFC Pharma and Healthcare Fund with 11.97% for the month, Aditya Birla Sun Life Pharma and Healthcare Fund, UTI Healthcare Fund, Mirae Asset Healthcare Fund, ICICI Prudential Pharma Healthcare and Diagnostics, rather PhD Fund, Tata India Pharma and Healthcare Fund, Nippon India Nifty Pharma ETF, ITF Pharma and Healthcare Fund, Quant PSU Fund, CAPSE ETF, Quant Healthcare Fund, Quant ESG Equity Fund. Now, if you look at these green ones, which are the monthly performance leaders with consistent returns from 1 month to 1 year, the highest return of pharma fund is 50.92, which is UTI Healthcare Fund, and CPSC gave 122.54, Quant Healthcare Fund 63.95. So the annual returns are a bit subdued because pharma funds are coming up now. Now, typically the pharma funds do well when the market becomes defensive with its bullish leaders. Pharma stocks are considered beta stocks. So looks like pharma stocks may do well in comparison to other stocks for the next 1 or 2 months. So it is good to invest on these pharma stocks now, especially if you are a short-term investor. Probably the market leaders, the typical bullish funds, may come back to leading position probably during the festival season, which may start in the middle of September. So pharma funds seem to be a good bet, and I did some of my investment this week already on some of these funds. Now let us look at the yellow ones or the amber ones. These are the ones where the above average return from 1 month to 1 year may be missing in one particular timeline. So they also are worthy to consider. They are DSP Healthcare Fund, ICICI Prudential Nifty Pharma Index Fund, Kotak Healthcare Fund, ICICI Prudential Nifty Healthcare Fund, DSP Nifty Healthcare ETF, Aditya Birla Sun Life Nifty Healthcare ETF, Axis Nifty Healthcare ETF, Motilal Oswal BSE Healthcare ETF, White Oak Capital Pharma and Healthcare Fund, Templeton India Equity Income Fund, Kotak Technology Fund. Now, Kotak Technology Fund is the only technology fund which made into the color this report, and basically it had a negative return for the week, but a decent return for the month, and 22.83% return for the last 3 months. Since it doesn't have data for 6 months and 1 year, so it still made a cut in spite of shortcoming on the monthly basis. Now we are moving to the bottom 50 on a monthly basis. We do this mainly to recognize any bearish reversal. That is, the stocks that have been doing well, are they getting into correction mode, is the purpose of this. And how do we do that? We will identify within bottom 50 annual returns that are above average are marked in bold. Then weekly returns and monthly returns below average are marked in red bold. Now, those stocks, so those funds which have above average annual return and below average either weekly return or monthly return are then marked with bold red. So they are potential bearish reversal candidates. So if you have invested in this, you may be better off, getting rid of these to protect your profits or to minimize your losses. Now, the one that is standing here is HDFC Defense Fund. It's still at 112.16% annual return. At good times, it had something like 147%. So people who invested in the last few weeks are sitting on losses. And it went through a weekly loss this week, 2.46% loss. Monthly loss is at 3.42%. So it is being highlighted here. Another one worthy mentioning is ICICI Prudential Commodities Fund. Commodities Fund has negative return both on a weekly and monthly basis, and it has an annual return of 41.12, which is decent. So be careful of that fund. Another one, UTI BSE Housing Index Fund, though it has 45.51% return annually, last month and last week it has been in correction mode. Okay, and maybe one more thing to mention, maybe the Mirae Asset Nice FANG Plus ETF. This is the US equities based mutual funds. There has been a significant monthly correction, and it is a good time probably to get out of the US investment at this stage, is the message here. Now let us move to equity annual top 50. CPSE ETF is at the top at 122.54%. Next is HDFC Defense Fund. The very few are in green, which is CPSE ETF and Invesco India PSE Equity Fund, which gives 92.28%. The one which are in amber are HDFC Defense Fund, which is question mark, LIC MF Infrastructure Fund, Bandhan Infrastructure Fund, Invesco India Infrastructure Fund, Bandhan Small Cap Fund, Kotak Nifty Alpha 50 ETF, Motilal Oswal Mid Cap Fund, which is the lowest in the annual return table, which is 70.59%, which is still decent. Next, we are looking at the annual bottom 50 funds. These annual bottom 50 funds are considered for potential bullish reversal with the above average returns in the recent timelines, which could be either on a weekly basis or on the monthly basis. So here what we have done is we have identified all the above average annual returns in bold black, and similarly the such above average returns we have identified in weekly and monthly basis. The worth, those worth mentioning here are probably none, because the annual returns are very subdued. So this is just to recognize what kind of recovery is happening But the bad news I can talk about is that there are a lot of bank ETFs, private bank ETFs and Nifty bank ETF funds. They are below average in terms of either weekly returns or monthly returns. So that means their bad days are not yet over. So be cautious about bank ETF mutual funds. Now we are coming to hybrid funds. Hybrid funds, the green ones are SBI Magnum Children's Benefit Fund Investment Plan, Axis Retirement Savings Plan Dynamic Plan, Edelweiss Aggressive Hybrid Fund, Aditya Birla Sun Life Financial Planning FOF, Aggressive Plan, Mahindra Manulife Aggressive Hybrid Fund, Aditya Birla Sun Life Multi-Index FOF, Tata Retirement Savings Fund Moderate Plan, Axis Retirement Savings Fund Aggressive Plan, Aditya Birla Sun Life Asset Allocator FOF. These are in green. The one in amber are Quant Dynamic Asset Allocation Fund, ICICI Prudential Equity and Debt Fund, Bajaj Finserv Multi Asset Allocation Fund, Mirae Asset Aggressive Hybrid Fund, Axis Equity Hybrid Fund, Tata Hybrid Equity Fund, Quant Absolute Fund, UTI Multi Asset Allocation Fund, Axis Multi Asset Allocation Fund, HSBC Managed Solution India Growth, UTI Aggressive Hybrid Fund, Kotak Equity Hybrid Fund. The highest monthly return is around 5.41%, bit subdued compared to equity funds. The best annual return is around 58.90 by Quant Dynamic Asset Allocation Fund. Now we are looking at the annual top 50. Here the one in green are SBI Magnum Children Benefit Fund, Aditya Birla Sun Life Multi-Index FOF, Axis Retirement Savings Fund, Dynamic Plan, Mahindra Manulife Aggressive Hybrid Fund, Edelweiss Aggressive Hybrid Fund, Axis Retirement Savings Fund, Aggressive Plan. I will not read the amber ones, so because the list is somewhat similar to the monthly ones. Now finally we are going to the commodity funds list. Commodity funds still have correction on a monthly basis, and some of the funds have recovered on a weekly basis, rather most of the funds. However, none of the funds could make it to the green status because there is a clear divergence between short-term performance and a longer-term performance, which are in the bottom. Only one made it to amber list, Zerodha Gold ETF, which has above average return for 1 week and 1 month, but it lags on a 3 months basis, and there is no data for 6 months and 1 year because it is a reasonably new fund. So there is no clear leadership here. If you want to look at the monthly leader is the one which still has negative return, minus 1.16, which is HDFC Gold Fund. There are two funds started by SBI. SBI Silver ETF for a weekly basis, it has 2.6%. SBI Silver ETF FOF 2.42%. Maybe we will wait for monthly data to come to consider them further. So that comes to the end of this week's bulletin. Standard disclaimers as shown here will apply. You can go into my blog Nats Fund Corner for more detailed review of the line items in the tables. You can look for my bulletins on a regular basis in any of my social network platforms as shown here. So with this, I like to come to an end of this bulletin. See you next week again. Have a good one. Be cautious out there because globally markets are being wobbly. So India also will get some sneeze on such things. Maybe there may be a 1 or 2 months pause with respect to bullishness of Indian market, which is quite likely. So be cautious about new investments, and wherever there is significant corrections you see on a weekly review, you may protect your profits by selling your funds at the risk of 20% short-term gain you have to pay to Nirmalaka. So with this, I will wind up for this week. See you again.